Hey, everybody. Thanks for coming. I hope you're doing well. My name is Jeff Gibby. I'm joined with my very, very good friend, Anne Marie Baiynd, which you can see probably on this side, actually, right here. Anyway, it's good to have you. Thanks for watching. There's a couple things I need to do before we get started, and so we're going to go ahead and do them. So um, today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell any specific securities, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risks inherent to trading securities. MetaStock, the Traders Forum LLC, and their employees do not, and guest speakers disclaim all liability for any investment decisions by investors based on the use of their software, trading strategies, or any information provided in connection with the company. MetaStock, the Traders Forum LLC, and their employees and their guest speakers do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information should be construed as investment advice or the solicitation to buy a security. So, a couple things if you're joining us on YouTube or if you're watching us on YouTube, hey, it's good to see you. Thanks for watching this video. Hope you enjoy it. Um, I want to invite you personally to kind of join our community, and you can do that for free. If you go to the Traders Forum, you can chat with other traders. We have all kinds of lessons where you can learn about technical indicators, candlestick patterns, the markets. It's a very, very active community. It's a growing community, and you can join for free. www.thetradersforum. My guest today is Anne Marie Baiynd. I just want to kind of talk a little bit about the format of what we're doing today, just in case, just so you kind of understand. We're doing a longer form session that's more for questions and answers type of a thing. And I hope you enjoy it. If that's not some kind of something, if you're looking for more of a short or more of something that's a little bit more instructional, that's great. We have a lot of that stuff, including with Anne Marie up on our YouTube site, youtube.com/MetaStock. So Anne Marie's a favorite guest of mine. We've been friends since we were teenagers, I think.
It feels like it.
Yeah.
It sure does feel like it.
You can reach her at Anne Marie Baiynd or on YouTube at Anne Marie Baiynd dash the Traders Book or on Twitter at Anne Marie Trades. So also Anne Marie helped us. I think she did the very, very first session of TickerTalk. Do you remember when that was, Anne Marie?
Wow, it's been a hot minute.
I think it was like November, but I could be wrong. We started the sessions and we are trying to come up with a name for them, and you were the one that came up with TickerTalk, and that's stuck ever since. So congratulations for that.
Thank you. Thank you.
Anne Marie, I'm going to kind of just talk a little bit about you for a second. I mean, we can go ahead and get rid of this. Anne Marie has been a partner of ours for a number of years. I think I moved to California and then I moved back, and that was like 15 years ago. And we've been
it's been at least 15 years.
yeah. And you haven't aged a bit. I've gotten all gray.
Yeah. Over spackling, my friend. Paint and spackling.
Yeah, I've silver foxed it out. For sure. But like, one of the things I always respect about Anne Marie is her ability to kind of just tell me stuff that somebody will say, hey, can you look at this stock? We'll be doing a chat session. Somebody will say, hey, look at this stock. And Anne Marie will go, okay, yeah, here's a bunch of stuff that she just pulls somehow magically out of memory. So Anne Marie, welcome. That's how I'm going to introduce you today.
Well, what a great introduction. I certainly hope I live up to it. You can see what a mess my office is today because I'm normally not such a wide angle lens. I got stuff on the couch. I got stuff over on my other desk. So I apologize for that, but I'm excited to be with you today.
Good to have you. You know, you can always tell the people that don't work in an office because their desks are clean.
I know, unless you're my husband, and he is, gosh, he's such a neat Nick. I try to bar him from my office. He always looks around and goes, how can you work in this disaster? But
my wife also does the same thing. She calls it, she's an artist. And it's just like after she gets done with a project, it's an explosion of paper. It's part of my artistic process. So anyway,
there we go.
How long have you been? We talked a lot about your background and kind of like the stuff that we did last time. And Can you tell us a little? I know you had when we had started talking about that, you talked about how you started in neuroscience research. You went to recruiting and then to trading, and it was kind of like a journey for you.
It really was. In terms of occupations, this is my literal third iteration. A lot of people change. Oh, I used to be and I really did change. I started as a mathematician, went into neuroscience researching, decided I didn't want to eat ramen noodles for the rest of my life, and so um, I went into recruiting of technical people like myself because I could talk the lingo and I knew what was going on. And um, I opened a recruiting company and did that for about 15 years. And, I got tired of. I got tired of the work. And interestingly, trading is a combination of all of those things. There's the behavioral science aspect, there's the understanding how people think aspect, and then there's the raw math that we use when we're staring down the charts a lot. So truly, I'll be 60 in January, and so it I feel like I finally got into the space where my entire life before has prepared me for right now. So I really love it. I've been doing it for 20 years and I still race to my desk every morning when I wake up because I want to see what the charts are doing.
What the stocks are looking like. Is it the first thing that you do in the morning, or do you have a process that kind of gets you ready in the morning emotionally?
That's a great question. Normally I dream about what's going on in the market, and so I normally will get right up and fire up my systems and go, all right, what's happened overnight? And then I brush my hair and my teeth. So
I have a visual picture of you like with your smartphone brushing your teeth at the same time. I think you're
that's a
that
good
wired in.
one. That's a good one. I usually take it to the bathroom after I'm done here and see if there's news that I've missed on the horizon. I've over the years I've learned to watch the macro news in terms of the raw data, not what people are saying about the macro news, because that changes all the time. But yeah, just looking at the data from a macro perspective, I've added that to my morning routine over the last maybe 7 or 8 years.
I think you could say instead of changes all the time, you could say it changes all the tweets. Based,
True. Yeah,
based
I
on
think
that.
you're right. I think you're right.
Can you talk a little bit about what you see in the macro data?
So the things I look for are, what do credit spreads look like? What's happening with money supply? I should look more at the currencies, but I don't, because they are pretty important. And then I look for things that people might get, hot and bothered about, like oil news based on saber rattling across the pond, or you know those sorts of things. Really, my brain just looks for, is the dollar moving up? Um, do we see motion in the metals? And then if I see that, then I'll go search specifically. Like when gold began its run up at about, well, it started running up, above 2000. But when it got to about 2500 and it wasn't giving back much at all, I thought, I got to go see what's happening. And very interestingly, that's when I learned that one, the US was shipping bars of gold in the belly of regular uh, commercial flights where you and I might be sitting on them, and in in the cargo hold they're bars of gold. And so there was a lot of that. And then I went to the central bank moves and I noticed that everybody was saying, "Hey, listen, this country's bought some more gold. This country's bought some more gold," and that is still continuing, actually. So the big dips in gold still need to be bought. the fiat currencies, when we print paper and don't have anything to back it with, that paper becomes more and more unstable the more we print.
That
And
makes sense.
so, the smart thing is to keep looking at it to say, all right, are they continuing to uh buy more gold? And the answer is yes. And then I thought, I wonder how the miners are responding to this, because notoriously, gold miners have not been great investments, but they got very smart. The the countries came over and said, listen, you don't have to refine it. Just pull it out of the ground. We'll take it home and refine it. And that's given them more margin because they don't have as much refining work to do, because the central banks that are buying them are just taking the raw product and smelting it at home.
Can you be specific about exactly what flights have gold in the bellies of them?
I no, I don't think they let us know, with good reason. We might, show up. But yeah, gold is extremely heavy. And
Mhm.
so you can't put a ton of it in, literally, you can't put a ton of it in the belly of a plane, or, just it'll fall from the sky. So, just small bits, but they've been
You don't
doing
need a
it for a
lot.
bit. I know, I know. I just need one. I just need a couple of bars.
Yeah, sure. A little bit here and there. Um, well, actually, gold obviously has had a huge run up to
Yeah.
up year to date, as well as a
Yes.
lot of miners. Do you see any winners or losers in gold miners? Yeah, if I'm looking to take advantage of that, it sounds like the time would still be right. Would I be looking to buy ETFs, or kind of what process would you go through? Would you look at individual miners?
Well, I would look at individual miners. I would say when you buy an ETF, you get the dogs with fleas and the pedigrees,
Hmm.
is what I would normally say. And so if you are a real student of the market, you'd need to look at the ones that are performing well and then go down and look at their balance sheets. More importantly, when they report, do they continue reporting with increasing earnings? Are earnings increasing over time? Are their margins increasing over time? Or they are at least holding steady? And those are the ones that you'd want to buy on the dip, right? A solid balance sheet is more important than ever right now.
Right on. Maverick wants to know if you buy physical gold or gold coins.
Yes, to
Oh,
both. Yes,
and
to
where do you
both.
keep those exactly? I'm just kidding.
Next question. Actually, there are a couple of places that will hold the physical gold for you, and you
Mhm.
can now buy physical gold and put it in your IRA.
There's this
So,
physical gold ETF, but the I can't remember what it is right
Sprott,
now.
all the Sprott ETFs are physical gold.
Okay.
Yeah.
Okay. Do you have a preference to those if you're looking to invest in, like, is there a reason that you do that over like GLD?
I Because the GLD allows options to be written against the actual instrument, it can cause significant dislocation. Now, you can do that. You can buy gold and then sell a covered call in the future to juice your upshot. But as I mentioned, gold order filled. Oh, there. Sorry about that.
It's
That's
okay.
tray fill. Um, so looking at gold ETFs, you could trade it like that. My thought is stick with somebody who holds it physically so it can't be levered. Now it means that it won't have as much volatility, and it runs in a nice rhythmic pattern. It does follow the market, but it allows you to buy on the dip and actually hold the physical instrument. So I do like the Sprott. You can go to Sprout Money and take a look at that. They make it really simple. Um, and you can buy something else I'm very interested in right now is Palladium. And the reason that I like Palladium is because it's a very significant input into the build of semiconductors. And we can't do anything without semiconductors. So I really like Palladium.
Okay, great. I want to go back to fundamentals because
Yeah.
I have to say that I very rarely look at a a balance
Mhm.
sheet, right? Do you are there specific? You said you wanted to look for earnings growth. Do you look at that year over year
Yes, or quarter over quarter,
or
right?
quarter over
If
quarter?
they
Okay.
have 6 quarters in a row where they beat earnings and you can see their earnings per share increasing, then that's great. The last thing that you could look at is what's their credit look like? Do they
Okay.
have AAA? And you can do that by looking at their preferred, if they have any preferred bonds, anything like that in that space. If they have good credit and they have good cash flow, then you've got yourself a really nice a really nice instrument. The problem right now is that traders are chasing price, and markets don't go straight up. We have an ebb and flow. And within that market space, because so many people are in the space, there's always the boom and bust, right? And I'm going to flatten this so I can pay attention to you
Okay.
because it is sitting at a tiny profit. Okay, so um, what uh, the key things you might look at something free like FinViz, right? That's a free tool, and you can look at it. It tells you earnings per share, cash to equity, free cash flow, and those sorts of things are, really good. They end up looking more like value, but what you want to make sure is that if you're investing for the long term, you think about something that's got legs for a long period of time so you don't wake up in the middle of the night and freak out. Like, for instance, CoreWeave. Everybody's talking about CoreWeave right now, but they've made no money. And um, their projections aren't to make any more money, and it feels a little bit like a dot-com thing. Now, if you bought CoreWeave at 65 and you're looking at it at, I don't know, what is it today? Like it was 150 something yesterday. So if we take a look at something like CoreWeave, okay, it's pulling back a little bit. It's 141.
What's the symbol? I'll put it up on the chart, or
Yes,
I'll put it up
please.
on the chart.
CRWV. Oh, beautiful. Thank you so much for
There
doing
we go.
that.
Yeah, no worries. Oh, I need to. Looks like it's coming up a little bit. Let me rescale this so it looks right. Okay.
Right? So you can see there's a lot of volume running in there. But what I think pushed the stock up is a lot of folks looking at value and thinking to themselves, wait a second, these guys have no earnings. They've got no projection for good earnings. They're just running on a great story. And what happens is um, people that really stare down balance sheets will go, you know what, I'm going to short this. And when it started running, we had nothing. This is a massive short squeeze. And what happens with a massive short squeeze is that it eventually pulls back to more reasonable prices. So, if you were fortunate and you happened to buy CoreWeave on the cheap, it's time to ring the register or feed the ducks, as they might say, because this is a chart that doesn't have anything but hopium attached to it. And it reminds me a little bit of a GameStop type move because people are piling in and buying these options that, uh, may or may not deliver over the short term. I would just say, that's a cautionary tale, even though it looks fabulous. Underneath, there are no underpinnings. And right now, when we've got all kinds of things going on, we've got interest rates that are staying higher. We've got tariff unresolved. We've got Ukraine and Russia in the mix. We've got Xi trying to pull the strings with the EU, getting them to come a little bit over so they can offer them cheaper prices, all kinds of things that put a big question mark in the space. And we've got the Fed next week. And even more important than that, tomorrow, we have the employment numbers after the ADP number yesterday. Yes, yesterday, that was abysmal. It was an absolutely abysmal number.
Oh, here, let's look at this. Do you feel like, so it sounds like based on the tone of that, of what you just said, do you feel like there's more of a volatility in the
Oh, yeah,
market?
there's definitely some more volatility. The volatility chains continue to have greater volatility in pockets in the near future. And so I believe that even though we've got enough juice to grind up, it's not going to keep grinding up at this particular space.
Okay. In general.
In general,
Yeah.
we need a little pullback, or what would be beautiful would be sideways consolidation June, July, August, and
Which
then
seasonally
a
would
nice
match.
move upside. Yeah, I'd like
Which,
to see that.
okay, cool. Um, do you feel like we're going to? It sounds like that's kind of what your thing is. Before we push up, we'll see some more sideways. Do you think
Yes.
we'll come back and test lows like the
No,
market? Okay.
I
Oh,
do not. I think the lows are in for now, certainly. I think we probably test higher highs before we test lows, simply because of uh, how much pressure underneath we continue to see. And interestingly, I think a large part of it is being fueled by big money who's seeing the writing on the wall about, hey, we've got more bankruptcies than even through the financial crisis. Right now we're reporting more bankruptcies. I think that's got to do with these cheap interest rates, that where people are having to refinance their loans,
hmm.
and so they're not able to make those payments. So we've got more bankruptcies, we've got credit risk widening. We just had JP Morgan, Jamie Dimon, come out and say, hey, you know what, we're putting a bit more money back for loan loss in uh, the consumer credit division into next year. And so there are quite a few things that very big voices are sounding the alarm on. And it makes a lot of people step into the market and go, all right, that's a short. But as the market keeps grinding upward, they have to buy to cover. And when you buy to cover, it pushes price up, but without support underneath. And so that's really the mechanic that's going on right now.
Are there any particular? We mentioned gold. We mentioned gold miners. Are there any particular other areas that you think are going to be bullish over the next several months?
I like commodities,
Okay.
so I'm bullish on things like natural gas, uranium, um, companies that are very strong in the energy sector, like a Constellation Energy, or a GE Vernova,
Okay.
GEV, um, CEG. Uh,
There's a good looking chart.
yeah, I mean, and people are chasing this on this underlying chatter about how uranium is going to make a big blast to the north. Well, here's the problem with that. Yes, small scale uranium reactors are going to be good for power because we're going to need them to run all of these chips and all kinds of things that we need that are going to be very energy intensive. What we have is a tremendous amount of regulation about it because there's been a lot of fear stoked about how we manage uranium, right? The last one was Fukushima, and that freaked a bunch of people out. Well, Fukushima is just fine right now, right? And
Yeah.
they've been able to hold things in, clean them up, and everything there was overblown, but fear really stops people in their tracks. Now, while people are getting over that fear, now we have to face regulation problems. And until we see those regulation problems, we're going to see some strong dips. Something that looks like this beautiful chart here, you got to wait for those pullbacks, right? Wait for the SMI to hit that zero space and then get back above the moving average. And that's a superb place to say, you know what, I'm going to start investing right now. So all of these triggers long, they look great, but in the brand new highs, you have to go, I'm taking some profit. I'm taking some profit.
We actually did a lesson yesterday on SMI. And
Excellent.
during it, we just kind of went through the indicator, talked about how it's calculated and stuff like that. I made sure to mention that it was what you had one time labeled your most reliable
Yes,
technical indicator.
it still is. I still use it today after all the time. I still use it today as one of my primary spaces to say, hey, listen, if I see a dip in that stochastic, I'm going to look for trend. If the trend is up, I know the dip in the stochastic is telling me there's a buy zone. If my trend is down and I see a bounce in that stochastic, wherever it is, a bounce off its lows, it tells me, listen, I'm going to be able to short it at those highs. Easily one of the cleanest indicators that sits out there is that stochastic momentum index.
Are you still using 8338 as your value?
Yes.
Okay.
Yes, I am,
Okay.
particularly on the daily.
You said last time. I do feed just to actually I'm going to kind of jump onto a different question.
Yeah, sure.
I fed the transcript of our last conversation to ChatGPT, which
Nice.
is where I got the questions from. So, and it did a
Love
great
it.
job. I'm curious, jumping off of the questions, I'm curious, do you use, I had Rob Booker, I don't know if you know who he is, but he came in and he will upload like a financial statement to ChatGPT and he'll say, analyze this financial statement for me and tell me what's good and what's bad.
Wow.
And he says that I had a kind of a little bit of a light bulb moment because my results of my last physicals, I just got the results and it's a bunch of numbers I didn't understand. And so I uploaded my financial results or my physical results and I said, how is my health based on this? And it gave me some really good insight into terms of like how healthy I am. Do you use,
Fascinating.
have you ever tried something like that with ChatGPT around trading?
Um, I have not. But what I do use ChatGPT for is to say, how reliable is this particular setup
Okay.
in general?
And
And
if you,
so it'll spit something out for me. I use it to write code.
okay.
Um, I will say something like, I'm interested in measuring implied volatility over the last month and a half in XYZ. And it will tell me, hey, this is what it looks like. And so, I mean, I like it. I have learned, I was afraid of it in the beginning, but I really like it. And I also use Perplexity, which is another AI tool that works really, really well.
Okay. Cool. Let's see. I do find I need to be careful. I was trying to kind of create some marketing bullets around a product we were releasing, and so I uploaded kind of a manual and pushed it in, and it was really good. Actually, what came out, I used a good part of it. I kind of reworded it, reworked it a little bit, but it made up about 20 testimonials that it just made up.
No way. You know what those are called in the business?
Well, no, what?
Hallucinations.
Mm-hmm. So
I think
anyway,
that's fascinating that they're called hallucinations.
yeah, there was a New York attorney that got in trouble for using ChatGPT to write his brief, and it ended up that it made up all of these case laws, these court cases that didn't exist. And yeah, he he needed to double check
How
his
to
work.
wait? How to become disbarred?
Right, exactly. I don't
Answer
know what
one.
happened with that. I heard it was maybe back in November. I'm sure there was an outcome, but they were really kind of the judge roasted him, just absolutely roasted him on it. Um,
Unbelievable. Check your work. Check your
yeah,
work.
especially if it's automated, right?
Yeah.
Uh, for position sizing, you said you were very mindful about position sizing. How do you size your trades today compared to like earlier in your trades or earlier in your career?
Oh my gosh. I was so terrible at that, Jeff, because I just did not estimate risk properly. That was really the biggest downfall that I ran into as a trader is my inability to manage risk. And
Hmm.
so trading in the early days, you know, you just look at a position and the only thing you think about is, ooh, how much money can I make?
Hmm. Yeah.
And you have to realize that professionals think the exact opposite, right? If I call you up and you're a professional, I call you up and I say, hey, I've got 5 million bucks that I want to give to you to manage, and I leave and give it to you. What do I absolutely want from you? Don't lose my money. And so when professional investors look at the markets and take positions, they are extraordinarily consumed with risk and seeing what their support edges look like. And that probably was the change that really turned the corner for me as a trader, understanding that. And so when I look at a position, and so let's pick another chart. One
Oh,
of your
yeah.
favorites is RCL, and I think they just reported. No?
I don't know.
I
But we should look
love
at
the
RCL.
honesty of that answer. That's fantastic.
I actually, I liked RCL quite a bit right around 2020 when it was kind of bouncing off of lows. It was a
Hmm.
good trade at that point. I can't say that I've been in RCL for a while,
Ah, gotcha.
but if
Gotcha.
it's cruising to new profits, I'm always happy to jump on the ship.
Right.
But
I
here we go.
get
Yeah.
that. I got that. Okay, so let's take a look at this. Do you see how the stochastic dropped below the zero line?
Right here.
Right? Yes.
Yeah.
So some folks might look at that and they'll see the moving average just to the left of it and they'll go, ooh, the moving average is down. That's going to be a short. But see, the overall average is up. So, what you have to look at is over the last several months, what has the trend with RCL been? And so it's been up. So, when that stochastic drifts just below zero, your goal is to watch it move back above zero and the moving average that we've plotted there in MetaStock. And
Mhm.
that gives us a buy zone that's very nice. Now, in the old days, what I would do is I would look at that and I would say, I think I'm going to buy a long and I'm going to go full size at the bottom of the range, right? The bottom
Mhm.
just below the gap or right into the gap. And I'll go full size, but you'll notice it gaps down before it moves back up. And my size would be so big that it would give me exactly, it would give me a heart attack and I'd get flushed out of the trade. And so what I do now is take an introductory position when it does something like that. And then I add once it gets above the moving average and my stochastic momentum is above zero.
Okay.
And
So
that's what I will
generally,
do.
when you're phasing into a trade, is it a two-part or a three-part or a multiple part process when you're kind of getting into a trade?
Yes, because I'm always legging into the trade, because when I take, let's say I take a trade before it gets up over the moving average. I do that all the time. I will look at relative strength and I'll say, okay, that's got strong upward trend. I'm going to buy that base, but I'll buy it in a small size. So if it gaps down through the support into another area of support and it begins to bounce, I go, okay, now I know where my floor is. I'm going to put my alert there and get out of the trade if it loses that level. And as long as it holds that level at the close of the next day, I'll be buying into it the next day. And I'll normally go in thirds, a third,
Okay.
a third, and a third.
Hmm.
And then I'll do the same thing getting out. I'll say, I'm going to take a third of it when it gets back to my prior congestion area. I often like to look at the prior sell zones that the chart shows. So I would go all the way to the left of the chart,
Are you talking about
far,
right here
far,
or
far to
further?
the left.
Okay.
Yeah, to the beginning of the chart where we first start seeing the candlesticks, way to the left,
Right
right
here.
there.
Yeah, this
Yes.
sells out. Okay.
Right? And I will look there to the left and I'll go, you know what? I'm going to take some profit. And that would be my first third. And then I would roll my stop up to break even. So everything else continues to ride with me should the chart continue to go to the upside. If it makes a brand new high from there, I'm going to cut it again. Why? Because I believe the broad market has got some constraints that allow me to say, listen, trim your positions when you get to new highs. Trim them. This is not a place where you add to your new highs. You got to wait for the pullback because we're seeing a lot of candlestick retracement.
You talk a lot about last time you talked a lot about trading spreads and butterflies.
Mhm.
How, what do you think traders get wrong when they initially go from trading stocks to trading options?
They don't understand the risk.
Okay.
First thing. The second thing is that what they think about is, ooh, look at how much I'm going to make, versus of the three things that are going to happen, one, it's going to move in my favor. Two, it's going to move out of my favor. Or three, it's going to do nothing. Only one of those gives you um, the opportunity for profit if all you do is buy options. And so there are a lot of option buyers that came in during the COVID era that are literally getting smashed to ribbons because they are looking at the charts and saying, ooh, this is going to go XYZ, without realizing that the market structure has changed. And so that's one of the things. The next thing is traders don't use implied volatility. And so, what implied volatility tells you is, okay, there are a bunch of professional option traders, and they are saying to themselves, listen, I'm going to sell the wings on this motion. I'm going to go up to resistance and I'm going to sell the calls. I'm going to go down to support and I'm going to sell the puts. And then I'm going to let price move in between there, and I will make money with theta decay and delta decay. Theta is the rate of time and how much time costs to hold an option. And delta is the rate of change that the option moves relative to the stock. And so a lot of times people don't think about those things, and they do things like they buy expensive options and then watch them erode. They don't like buying spreads because they go, oh, that's going to cap my profit. Well, listen, sometimes it does cap our profit. If a chart is moving straight up to the moon and you just happen to catch it at the right time, that's fantastic. However, if you've got charts that are continually retracing candlesticks, you're going to be left in a dead calm, and when the market is in a dead calm over time, that means it's sloshing back and forth, your option erodes dramatically. So those are the key things that I think traders who are looking to do better with options should go look at. And the CBOE, the Chicago Board of Options Exchange, has tons of free study on those things from incredible option traders that have been around for 35 years or more.
When you say the market structure has changed, do you mean something simply like, hey, it just doesn't go up as much as it has before? It's more volatile? Or what do you mean when you kind of say that the market structure has changed?
That's a fantastic question. And the easy answer is just what you said.
Okay.
So if a
I'm good with
chart,
the easy
yeah,
answers.
and those are the best ones, right?
Hmm.
You look at um, a high to a low in a particular period of time, and then you see what it does at that high. If it ends up saying, oh, look, I just moved up that high, I'm going to dance above it for a quick second, and then I'm going to roll right back over and retrace 50% of the move. That was not happening in 2020 and 2021, the middle of 2020, 2021. In by 2022, instead of holding the highs, all the charts were doing were breaking the lows. And so
Okay.
we can look at something like SPY to show that. And the structure literally changes. It's grinding upward to grinding downward. And you can see that that is a change. It tells you what the traders are thinking. The traders are thinking, if I can't get a new high, I think I'm just going to get out of this trade, right?
Right.
And now the market structure is saying, hey, I'm going to run up for several days, a week or two, but when I fade to support, it's going to be a big fade. And so that volatility becomes a big part of watching market structure. A, a very, very key thing. You just have to think to yourself, listen, what are the traders doing? Well, they're running up to these brand new highs, and then all of a sudden, like, they just fall off a cliff.
I'm going to have you look at a chart that I like.
All right.
That's
Let's do it.
currently. Let's go ahead and look at it and just see what your opinions are on it. It's Roblox.
Ah,
Oh, there we go. Let me get the right symbol in here right.
let me put my smart girl glasses on so I can see what I'm looking at.
This has had a nice run.
Oh, yeah, it's huge. Yeah.
In fact, it's up almost to 95 today. Wow. Where are we at? Okay.
Yeah. And when something goes to 95, very often it tries to hit the big fat round number of
Yeah.
100.
Yeah. What are your thoughts on this one? I've been in it for a minute.
It's very strong. It's holding the moving averages very well. It's still got buy zones that make for great spots on the dip. So let's look at a weekly chart.
Okay. Sure.
Okay. So
I
do
can
we
zoom
see
in too
that
if you'd
100 line?
like. Mm-hmm.
So
Right
this
here.
thing has been basing since, holy smokes. Go down to what is the date? Q1 2022. Okay.
Are you talking about right here where it
Yeah.
kind of broke down
Yeah,
below
yeah,
100?
yes.
Yeah,
But the
1-7.
base would be all the cluttering and collection of price action at the bottom. So this
Yeah.
thing has had a base for about 3 years and it just started breaking out. That's a solid stock. The question is, in these upside moves, what kinds of retracements do we normally get? And the last big weekly retracement was the one that went down into April, and it's been on a rocket ship to the moon ever since. So it went down with the same speed that it's moving up right now. And so when we look at that, we go to our stochastic above, and we can see that that stochastic has still got a lot of heat on it. If you've been in it for a while, I'd begin to trim gains at around this 95 to 97, or you can write a call against it. And so that would be, hey, let's go to October, maybe November. Let me see what that's going to be right now. Check my option chains here. All right, so if we go to Roblox and we say, let's go to November, and we say, all right, I am going to sell the 100 calls that expire in November. It's going to give you $11 for every 100 shares that you own. So that's $1,100. And that is literally an $11 cushion on the price of your stock. So it could fade to, it's at what, 92.74 today. It could fade to 81 and you would be just fine. It's a little bit of a buffer event that says, hey, I'm okay with surrendering it at that price. And so that's really what I like to do. So whatever price point you got it at, literally, if you loved Roblox and you said, you know what, I'm keeping this for the long haul, you could literally go into, this has got a really nice option chain. You could do a leap, which is 1 year to the future. And you can say, you know what, I'm going to sell those 95s, and it's going to give me $17 a share of cushion, right? So at
Mhm.
92.50, $17 of cushion is, in the 70s, where you would have your um your cost basis on the stock. And so even after a healthy pullback, it ends up giving you a nice area where you could go in and sell some more options. Now, the flip side of that is somebody would say, yeah, but what if it goes to 150? Listen, it could easily go to 150. It's not going to go there tomorrow. And even if it does go there, it's not going to stay there without a little bit of retracement. And so let's say you bought it right here at this price at $92 and you sold the 95s instead of the 100. You sold it just about at the money, and you sold the 95s for next June. They're going to give you $19.70. So let's say somebody comes in right away and calls the stock. So you just bought it at 92, you sold it at 95, so that's $2.50 thereabouts, but you also collected $19.70. So you're going to make $21 a share if you just make that trade. It is such a great way to juice your returns in a position that looks like this. But what you have to do is not get married,
Right, right.
not be so afraid to go, oh my gosh, I don't want to give up the stock because maybe it'll be 400 one day. Yeah, it will be, maybe, but not all in one day, and certainly not in the next year. So just be comfortable trading around the position. You can see the last big run up it had, it retraced what looks to me like almost 50% of its move.
Mhm.
So not a bad idea, my thought.
And you can always get remarried later.
That's right.
Carrie wanted to know why the symbol
Yeah.
wasn't showing up, and I had to play with it a little bit until we got the symbol back. So, in any case, last time we talked, you were talking about software as a service as a sector you really liked, and
Hmm.
cybersecurity as a sector you really liked.
Yes, still.
How do you are those? Okay, you say still, so you still like those sectors
Yeah,
quite
I
a bit.
still do like them quite a bit.
Are there sectors that you like more right now? And how do you decide when it's a good time to change your focus?
Um, the biggest thing I like to do is look at something that tells me who's been the leader over the last 6 months, 3 months, 1 month, and are they changing direction? So let's say this week it's energy, financials, utilities. I don't know, just pulling a rabbit out of a hat with
Yeah, sure.
those. What I will do is I will look at the 6 month and see if it's continuing to rise, seeing if those three sectors are continuing to rise because I saw them 6 months ago and I go, oh, those guys are, as a group, they are rising in terms of how people are investing inside of them. Then I will go, all right, let's see in this sector who are the best performers. And then I'll look at the top three or four in each one, and then I'll say who's got the strongest balance sheet. It's usually going to be the one that's performing the least well, to be honest. That just happens. Um, but you're buying it at a discount. If you look at something that's really high flying and you go, no, I want to get involved with that, then really what you're thinking about is how can I get involved with smaller size and get out as soon as I get to a brand new high? Or be very aggressive about raising my stop because we are sitting in markets that can be very reactive. Take, for instance, today, we had some number this morning that came out and the market moved way higher. And now it's essentially retracing most of the move today. And so you have to think to yourself, wait a second, at any time, I have price action that would tell me I need to be careful about what I'm doing. I simply need to be careful about what I'm doing. And that it's tough, right? It's tough to have patience in a broad market like that. But once you've gone through and said who's in charge, who keeps running up, and then look at the balance sheet and go, all right, their balance sheet looks good. Their earnings continue to beat. Um, they continue to have market share flattening or at least growing or at least flattening. And then you can go, all right, let's look at the chart and see where support is. And we can do something there.
Last time we talked, you also said you had 25 open positions. How many? Do
Yes,
you
I
have more
have
than that
trimmed
right now?
down. I have trimmed down. I have 14 open positions right now, and it still feels like a lot.
Okay. Is there a way that you kind of focus on staying mentally sharp when you're managing that many positions?
I have alerts all over the place.
Oh, okay. Okay.
Yeah. My memory is not so good. So I have alerts set up everywhere. And I've positioned so that in the event I have some kind of shock that pulls the market back, I'm sitting in a spot where I've got short calls that I can take advantage of. And as things rise, I continually take profit at new highs. I continually do. Now, there's going to be a point where I go, well, I don't want to whittle down my position any more than it is, but maybe the next time it hits a new high, I'll sell a call against it or something like that.
All right.
These have been great questions, Jeff.
I blame ChatGPT for most of them. um, you told new traders last time we talked to write down why. What was your why when you started? And has that changed?
My why was to prove something to myself, that I could do something that I saw was really hard. And now that I've proven it to myself, my why has shifted really dramatically. And it's why I enjoy coming on these types of shows with folks like you, is because I had such a long journey of figuring out how to be profitable. I think all of my mistakes make me a good feedback event for traders and investors who are attempting to get better with what they do. It's sort of like people always say, and Michael Jordan has said that this, I'd make a terrible coach. Why? Because I didn't have the struggles people had. Right? I mean, Michael Jordan just did not have the mental struggles people had. But if you've run through the mental struggles and the physical struggles and you've still accomplished, you have a great deal more experience that makes you a great coach. And so, like Steve Kerr, right? He was essentially good, but a journeyman. And he's one of the most fabulous coaches out there. And I think if I'm going to blow my own horn, I would say the reason I love sharing this type of information is because I've gone through so many minefields and made so many mistakes that if I can say one or two things that helps a person go, yeah, I'm not going to do that, then I found value in the work that I do. Because, other than shuffling money around all day, I mean, I need to do something to give myself a different element of worth.
All right, last question. Final question. You ready?
All right, I'm ready.
How's your day? No, I'm kidding. um, uh, you had said your stats really hurt your trading initially.
Yes.
And is there a process that you can describe that helped you move from overanalyzing everything to developing a better intuition about the market?
So when we first get into trading, we think, listen, I've done all the analysis. This is absolutely where it's going to bounce. Absolutely. And that's never the case. When you come from a hard and fast space like accounting or mathematics, not applied mathematics, but raw mathematics, there's always one right answer and usually one way to get there. And so I had to turn that completely on its end to survive. Nothing is set in stone in the market. There are no hard lines. Everything is a shade of gray. And so embrace that. Embrace the fact that no matter how hard you work at getting the right entry, that sometimes it's going to be wrong. And the only power you have in a time like that is to manage your risk. And so managing risk becomes primary. And over time, you'll learn, you know, I just need to not be so rigid. This should not have broken support, but it's recovered support and now it's at a new high. So what did that mean? That could mean a dozen things. But what it definitely means is you're moving to a higher high. So wait for a higher low to get yourself involved in the trade.
You said the word rigid, and it kind
Yeah.
of popped in my head because, like, I think a certain amount of rigidity helps traders. It helps them kind of stay with their
Oh,
stop loss.
absolutely. Oh
But
my
for me,
gosh.
I also put rules in place that are too rigid. I'm like, okay, well, Bitcoin's a good example. I was like, oh,
Yeah.
what is this thing? Like, this is the tulips, and it's never,
Yes.
you know.
Yes.
And so for the longest time, I was a very big doubter in terms of Bitcoin as just like a thing, right?
Yeah.
And that rigidity closed off that as an entire opportunity. So I think that kind of just hit a bulb in my head when you said the word
It's so
rigid.
true, though, right? We
Mm-hmm.
do have a tendency to be very rigid about ideas, concepts, and we're reluctant to change.
Mm-hmm. Yeah,
And so, the important thing, the most important thing that you do in the chart when you're trading is to manage your risk and not go, hey, I'm going to take a 10-point stop. The market doesn't care what you think about what risk might be. It's
it's
going
not
to
on their
tell you in
spreadsheet.
the chart. Yeah, it's going to tell you on the chart what the risk actually is.
Mm-hmm.
And so a lot of people get into these spaces where they go, well, I only do this and I'm looking for 4% to the upside. So I'm only going to have a 2% down. The market might have a rotation that is 5% down. The market does not care what your rules are. So learn what the market's current rules are on the playing field and realize they change all the time, and then assess your risk. That is so huge. And being rigid that way is going to take you away from things, but also if you're rigid about I must assess the proper risk, you're going to end up on the right side of the trade, just so long it's not an arbitrary risk, you'll do quite well over time.
Are you saying the market doesn't care how much I can afford to lose?
That is exactly right. Exactly
Henry,
right.
as always, it's such a pleasure to have you. I'm so glad you came.
Same,
Thank you.
same. I
You
had a
too,
great time.
at Anne Marie Baiynd, Dash the Trading Book, uh, on X, formerly known as Twitter, at Anne Marie Trades. And if you haven't yet, join our community, thetradersforum.com. Anne Marie, thanks for being our guest. I appreciate you.
My
It's been a great.
pleasure. Yeah, absolutely, Jeff. I'll see you next time.
All right. Thanks, Anne Marie.